welcome. So today we have a special presentation. Today we're going to talk about Options 101 and you're going to love it. This today is perfect for you if you're absolutely new to options because I promise that I will make options easy. This is also great for you if you have some experience with options but you're not quite sure how all this works. And it is perfect for you if options are sometimes a little bit confusing to you. So let's get started, shall we? All right. So today we're going to talk about option contract specifications, rights and obligations, intrinsic and extrinsic value, time decay, delta, gamma, and theta, the Black-Scholes model, the binomial model. You know what? I'm just kidding. You know, this is what most people do when they talk about options. They talk about all these fancy words and they are trying to confuse you. You know me. I like to keep things simple, and this is what we are going to do today. We keep things simple, and I just need to move something out of the way for me, and here we go. All right. So today, Options 101. I want to show you the 3 things you need to know, and I want to show you the 4 option strategies. These are the building blocks. Once you understand these 4 basic strategies that I'm showing you today, you will be able to go for more complicated option strategies, so no worries there. So, but let's get started. Again, Options 101 for beginners. Oh yeah, by the way, at the end of our time together here, I would like to invite you to trade together, because if options are intriguing you and you say, you know what, I think I would like to do this. So my head coach, Mark Hodge, myself, and you, we can trade together next week if you want to. And I'm going to invite you at the end of the presentation. Does that sound good? Are we ready to get started? If you are ready, give me a quick thumbs up so that I know that you are ready. And then we dive right in. All right. Fantastic. So here are the 3 things you need to know about options. And this is universal. First of all, options have a so-called strike price. We're going to talk about what that is, and an expiration. So that's what you need to know. Options have a strike price and an expiration. And I'll explain on the next slide exactly what this is. Number 2, the next thing that you need to know out of the 3 things, there are calls and there are puts. They're also called call options and put options, and I'm going to show you exactly what that means. And thing number 3 that you need to know is you can buy options and you can sell options. So these are the three things that we want to take a look at in more detail over the next probably 30 minutes or so. Sound good? Okay, so let's talk about thing number 1, the strike price and the expiration. So the strike price is the price at which you can buy or sell an underlying stock. And we'll get to this in just a moment. And the expiration is the date by which you can buy or sell the stock at this price. So thing number 2 that you need to know is that there are call options and that there are put options. A call option gives you the right to buy a stock at a certain price. And we already talked about it on the previous slide. It is the strike price before the expiration. So let me give you a very specific example. Often you see a call notated something like this, okay? So this here is an AAPL call 280 April 17. So let's decipher this, and what does this mean? It means that you can buy Apple, the stock Apple, for $280 before April 17. Now, you have the right to do this, but not the obligation. Let's take a look at a chart and see if this makes sense. As I'm recording this right now, Apple is trading at $260. Maybe a little bit above, maybe a little bit below, but that's what I saw when I looked at the charts earlier, when I took this screenshot here. So again, this option, which says AAPL call 280 April 17th, means that we have the right to buy Apple for $280 before April 17th. Now let me mark the line here. There we go. Okay. So Apple is right now trading at $260. And you have the right to buy Apple for $280 if you would own this option. Is this making sense? Let me ask you, how much is this option worth if Apple is trading right now at 260 and you can buy Apple at 280? It doesn't make sense, because why would you have the option? You could buy Apple outright right now for $260, which is cheaper than the strike price that the option is giving you. So this means that the option right now is worth nothing because it is so-called out of the money. This option is only worth something if Apple moves above 280. As long as it stays below 280, this option is not worth anything. So let me give you another example. Here is a different strike price. So this is an option, an Apple call option for $240. The strike price is $240 and the date is April 17th. So this means that you have the right to buy Apple for $240 before April 17th, on or before April 17th. So let me mark this right here. There we go. You see the line? So this is 240. When you have this option, when you own this option, you have the right to buy Apple for $240. And right now, Apple is trading at $260. So, same question here. How much is this option worth? Well, again, you're allowed to buy the option, the stock for $240, and right now it's trading at $260. So this means it is worth $20. This means this option is in the money. Don't worry about the in the money and out of the money. Just understand the principle. The strike price basically determines whether this option has any value or not. So it is worth $20. But here's the kicker. If we look at the price of this option right now, you will see that this option, I need to get out of the way a little bit, something like this, that this option right now is trading at $22.30. So why is this trading for more than $20? Why is there a so-called premium in there? This is what option traders call the time value. And here is why there's a time value. Because it could be that Apple is moving even higher right now, right? So this is what traders are anticipating, because we have 10 days left where we are allowed to buy this stock, Apple, for $240. And you see, as this goes higher and higher, it will be worth more. So options always have some time value in there in addition to this real value. Is this making sense thus far? All right. So let's do this. If this is making sense thus far, click on like so that I know that you're with me. And if right now you're still a little bit confused and say, well, what's going on? This is the cool thing. As you know, there's a video on YouTube, so it lives on the YouTubes forever. So you can watch it again, because this is what I highly recommend. We're going fairly quickly here because I'm giving you an option education that usually would take days in probably 30 minutes. Or right now, I'm doing really good. We might be able to do this in less than 30 minutes. Anyhow, so this is the basic principle of a call option. Hey, by the way, if you would like to have these slides that I'm showing here right now, my team should have posted it in the description. So in the description right underneath the video, there's probably a link to the slides where you can download it. So this way you have it on your computer. You can even print it out and then make a few notes on the slides if you want to. Are you liking this? Okay, good. So let's move on. And if right now you're still a bit confused, trust me, by watching it again, you will get it. We're right now only 10 minutes in. So if you watch these 10 minutes again, I promise you're going to love it. Okay, so we talked about the three things that we need to know. The first thing that you needed to know was the strike price and the expiration. And now you have hopefully a better idea what the strike price and expiration means. Now let's talk about the second thing that you need to know, which is that there are call options and that there are put options. So a put option means that you have the right to sell a stock at a certain price before the expiration. Just a few minutes ago, we talked about a call option. So now let's talk about a put option. All right, somebody says the slides are giving you an error. Don't worry about it. I'll fix it right when we are done with the presentation. Let's focus on the presentation. I promise I'll make the slides available. All right, so let me give you now another example. We just had an example about the call option. Now we talk about a put option. Here is, right here, an example, AAPL put 280 April 17. What does this mean? It means that you have the right to sell Apple for $280 before April 17th. So again, same example. Right now, Apple is trading at $260. So if we have the Apple put for $280, it means that we have the right to sell Apple for $280 before April 17th. And let me draw this line for you right here. See it? Good. So let me ask you this. How much is this option worth? If Apple is trading right now at $260 and you have the right to sell it at a much, much higher price, if you have the right to sell it at $280, how much is this option worth right now? There is some value in there, right? Because you would pocket this difference of $20. If you right now had a put option that allowed you to sell Apple for $280 and you can then immediately buy it back for $260, you make $20. Making sense? Okay, I see that you're with me, loving it. That's fantastic. So you get the idea about call options and put options. So about the three things you need to know, we talked about a strike price and an expiration. You got that down, right? We talked about that there are call options and there are put options. And now let's talk about that you can buy options and sell options, because this is an area that confuses many option traders. So again, let's keep it simple. If right now you're still with me and you say, yeah, this is making sense, I get it. Or even if you say, I'm not quite sure, but I start to get it, that is perfect. Now let's talk about buying and selling options. When you buy a call option, we have just seen it in our example, you make money when the stock, in this case Apple, goes up, right? Now, when you buy a put option, you make money when the stock goes down, right? Okay, so these are the basics. You might want to write this down or take a picture. The beautiful thing is when trading, you can have a cheat sheet. You can write this down on a Post-it, stick it on your computer. When you buy a call option, you make money when the stock is going up. And when you buy a put option, you make money when the stock is going down. Take a picture, or as I said, I'll make the slides available for you. I'll put a link in the description right underneath. So we talked about buying a call option, you make money when the stock goes up. So what happens when you sell a call option? Ooh, let's talk about that. So let's say, same example to keep it simple enough. We are using the Apple call 280 that expires on April 17th. And I'm recording this on April 8th. So we have like 9 days to expiration. So the buyer has the right to buy Apple for $280 on or before April 17th. This means the seller, it's the exact opposite, right? So the seller has to sell Apple for $280 before April 17th. Does this make sense? So read this again. Very important. As a call buyer, you have the right to buy a stock at a certain price before the expiration. As a seller, you have to sell the stock at a certain price before the expiration. So let's take a look at the example here. Again, right now, this is not worth anything, as you know. So I'm putting, Oh, I wanted to do the put option. So let's do the put option here again. So this was the call option. So for the put option, that's what I wanted to do here. So the Apple put option for $280, the buyer has the right to sell Apple for $280 before April 17, right? And the seller has to buy Apple for $280 before April 17th. I know. Sounds a little bit confusing. This is why you can pause the video if you're watching this right now. Rewind it. Go back a few seconds, 20, 30 seconds, and look at it again. So, this means, in a nutshell, here is a quick summary of what we have learned thus far. And then I'm showing you the specific strategies that we can apply. So, a call buyer wants the stock price to what? It wants the stock price to go up. A call seller wants the price to go down or stay down, right? Because otherwise, he has to sell the calls at a certain price. The put buyer wants the prices to go down. And of course, the put seller, who's on the other side of the trade, wants the price to go up. Is this making sense thus far? Okay. Take a picture of this or print it out. So this is really important. This is your cheat sheet here. So this makes it very easy for you to say whether you want to be an option buyer or an option seller. Stop. Okay. Stop right here. And here's why. If you are confused at this point, do not go any further. Stop right here and go back, because here's what's going to happen. If you're confused right now, all that will happen if you continue watching, you will be even more confused. So go back, rewind, watch this presentation again, watch these quick 15 minutes that I did thus far, and let it sink in what you have just heard. Really, take your time. We are doing an option crash course here. This is an option crash course in probably 30 minutes that might take days for you to understand. And that's the beautiful thing about being here on YouTube, because this way you can watch it again and again. So trust me, if you watch it a few times, you will get it. However, if you're a little bit confused and if you don't understand these basic principles, it will only get worse from here. So do yourself a favor. Also, if thus far this is making sense and this is helpful, do me a favor and give me a quick like. And if you're just tuned in and this is your first time here on the channel and you're enjoying this thus far and think, oh my gosh, I want to watch more videos, click on subscribe. There's a subscribe button here, and hit the little notification bell, because this way you get notified whenever I release a new video or when I'm going live. And we'll continue with the 4 strategies that you can use based on what you have learned thus far. But again, this is why I'll leave this beautiful lady up here for a moment that says, stop, okay? Because if you didn't get what we have talked about thus far, the next section will only confuse you. And I want to avoid that, okay? But let's move on. So at some point, you will probably have caught up. So let's continue our presentation here. So based on these 4 strategies, okay? So these are the building blocks. If you expect, let's just do a quick check. If you expect the price of a stock to go up, what 2 options do you have? What 2 strategies can you apply? You can either buy calls, as you can see right here, or you can sell puts, because both the call buyer and the put seller want the price of a stock to go up. And in just a moment, I'll explain you when you want to apply this strategy and when you want to apply that strategy. Now, if you're thinking that a stock is going down, you can either be a put buyer or you can be a call seller. Okay, so let's go into very specific examples and show you what strategy you should employ and when. So we're going back to our example, the Apple call of 280 before April 17th. Again, you know, Apple is trading right now at $280, and we have the right to buy Apple for $280 on or before April 17. So how much is the option worth? We already talked about it. It's worth nothing because it is out of the money. Apple is trading right now at 260, so that kind of doesn't make sense. However, if we look right now at the option price, we see that this option is priced at $1.20. Now you already know this $1.20 is the so-called time value. So what happens with this $1.20? If you're trading call options and if you are a buyer, if you want to buy this option right now, again, as an option buyer, what do you expect Apple to do? Go up, go higher than 280. Otherwise, you wouldn't buy this option. So as a buyer, you pay $1.20 for this. As a seller, on the other hand, the seller gets the $1.20. It's a very simple transaction, right? It's like buying or selling a banana. So you get the idea. This is what trading is all about. All right, now let's talk about two possible scenarios. Let's say in scenario one, Apple shoots up, as you expected, to $290 by April 17th. So what does this mean? That when it goes up all the way, how much is the option worth right now? If you have the right to buy Apple at 280 and it is trading at 290 right now, how much is this option worth? $10. Exactly. So as a buyer, here's your profit. You would get the $10, the difference, but you remember you paid $1.20 for the option. So your profit would be $8.80. As a seller, it's the other way around. As a seller right now, you have to sell Apple at 280, but it is trading at 290. So you're losing $10 here, right? But earlier you got $1.20. So your loss is $8.80. Does this make sense? Of course, the money that the buyer makes is exactly the money that the seller has to lose. Is this making sense of who is making money when and where? Okay, good. So scenario two, let's say that Apple is going up, but not all the way to 290. Let's say Apple is only going up to 270. So it is staying below the strike price that we have up here, the strike price of 280. So what does this mean? The buyer right now, how much is the option worth? If you have the right to buy the stock at 280, but it's only trading at 270, how much is this option worth? Nothing. So as a buyer, you're out $1.20. You lost $1.20. As a seller, you're happy right now because the stock stayed below the strike price. So this means that nobody is going to exercise this option. You keep the $1.20 and you don't have to give anything back. Therefore, you're making $1.20. So scenario one, let's go back to scenario one. If Apple moves above the strike price, the buyer is happy and the seller is unhappy. In scenario two, if the stock price stays below the strike price, the buyer is unhappy and the seller is happy. Okay, is this making sense? Okay, good. Again, we talk about these option strategies. This is why I said, okay, a call buyer is happy when the price goes up, and a call seller is unhappy when the price goes down. But we also talked about it that we can switch it around a little bit. And that's what I'm going to do right now. See, oh, quick question, of course. So before we move on here, is this making sense thus far? Because if it does, click on like. This way I know that we are going at the right pace. And we probably have another 10 minutes in this presentation. Wow, we're making really, really great time. First, I thought it would take me 45 minutes to explain it, but it seems that we can be done with it a little bit earlier, which is great, so that I can answer your question. Again, if not, watch it again. Don't worry, you will get it. Again, we're going here at a super high speed. And if right now you're already getting it, good for you. I mean, congratulations. Honestly, when I first learned about options, I would have to watch this probably 3 or 4 times before I'm getting it. But trust me, it is time worth investing. Okay. So we talked about the put. So let's talk about the put here as well, right? We used the call as an example. So let's talk about the put. So the Apple put 240 expiring April 17th. The buyer has the right to sell Apple for 240 before April 17th, and the seller has to buy Apple for 240 before April 17th. Make sense? Very similar example. So let's draw a line here so that you see. There we go. Okay. So let's think about it. Right now, how much is the option worth if Apple is trading at 240 right now and you have the right to sell at 240? How much is this worth? Is it worth anything? It is worth nothing, right? Because it is trading right now at 260. Why would you sell it at 240? You would lose money, right? So it's worth nothing. However, if we look at the price of the option right now, it's $2.11. What does it mean? That is the time value. That is the premium of an option. So when trading put options, the buyer has to pay $2.11 to buy a put option. And this way, if Apple goes below 240, the buyer makes money. And of course, the buyer buys it from the seller, so the seller gets $2.11. So let's go talk about scenario one. Apple moves down all the way from 260 to 230, okay? And you have the right to sell at 240. So the buyer, again, would make $10 because Apple is all the way down to 230, but you are allowed to sell it at 240. So you make $10, but you paid $2.11 for the option, so your profit is $7.89. Now, as a seller right now, you're probably not too happy because now you're losing the $10, so you got $2.11, but you lost $10, so your total loss here is $7.89. Making sense? Okay. So the buyer, let's do the second scenario. In the second scenario, let's say Apple is going down. So this was the first scenario here. In the second scenario, Apple is going down, it's dropping, but only to $250. It's not dropping all the way down below your strike price. Remember the strike price of 240? So this means now the buyer doesn't get anything because Apple didn't move far enough down. So, and we paid $2.11 for this option for the right to sell it. So we are out of pocket $2.11. The seller, on the other hand, now is happy because the stock stayed above the strike price. So meaning that he collected the premium and doesn't have to give anything back. So he collected $2.11. Pretty good. So again, the four building blocks that we have here is, now we were talking about the put buyer. The put buyer right here is happy if the price goes down. The put seller is happy if the price goes up. Making sense? All right. So stop. Again, you gotta understand before we move on, this is your second stopping point. This is where you want to stop and say, okay, did I really get all this? These four strategies that we talked about. Because then we're going to talk about more of when exactly you want to be a buyer and a seller. So if right now you're still confused and you have a question and you say, I'm not quite sure if I got it, again, make sure that you print out the presentation that I have for you. Take some notes. Watch this again while you're taking notes. And trust me, after watching this video 2 or 3 times, you will get it. If this is your first exposure to options and you're still a bit confused, it is absolutely normal, but don't worry about it. I promise, if you watch this 2 or 3 more times, you will get it. Okay, but don't move any further if you're confused already. This is why we have 2 stopping points in this video here. I said earlier, stop where I said earlier, and only if you're getting what I just explained, then continue. Otherwise, just watch the segment again. Make sense? Good. So, again, we have these 4 strategies, and I'm going to rearrange them right now because you see right here, we had when the call buyer, let me just use the mouse. The mouse actually a little bit better. So call buyer want the price to go up, and as a put seller, you want the price to go up. You see, I can rearrange this a little bit. So if you expect prices, there we go, to go up, you can either be a call buyer or a put seller. Now, if you expect prices to go down, then you can either be a put buyer or you can be a call seller. So what I want to do right now is show you exactly what you should do when. And in order to gauge when to be a call buyer or a put seller, here's what we want to look at. We want to look at, here we go, the so-called VIX. The VIX is the volatility index. When the VIX is high, you want to sell options. And you see, the VIX, for example, was high in the beginning of, 2018. The VIX was pretty high towards the end of 2018. And right now, as we have the 2020 crash, the VIX, the volatility index, is high. So why do you want to sell options? Well, because option premiums are higher when the VIX is high. And again, I can bore you right now with the Black-Scholes model and the binomial model, and it wouldn't help you. Just remember as a cheat sheet, when the VIX is high, you want to sell option, and when the VIX is low, as it is most of the time, most of the time the VIX is rather low. It is between 10 and 20. When the VIX is low, you want to buy options because now options are cheap. See, this is your cheat sheet, and that's a beautiful thing. All this stuff about volatility, implied volatility, historical volatility, you can shortcut it by remembering just this. By saying, okay, when the VIX is high, and for me, high would be above 30. If it is above 30, you want to sell options. If it is below 30, if it is in the normal range between 10 and 20, you want to buy options. Okay, so trading options can be very lucrative, but let me just go back to for 1 second here. So is this cheat sheet helpful? Because I want to make sure that I'm not overwhelming you. After all, this here is Options 101. So want to make sure that we are keeping it simple, that we are keeping it easy. And so these are your cheat sheets, because once you get these basics, you can take your option trading to the next level. And at some point, I'm planning to do an Options 201 class, but it wouldn't make sense to go into more complicated strategies right now if you don't master these basics here right now. So as you can see, trading options can be very lucrative. It can be really fun. It is actually fun. Trading options, especially when you are buying option, is perfect for small accounts. So if you have an account of $2,000, $3,000, $5,000, trading options is perfect for you. It is awesome also for bigger accounts, because if you have a larger account, you can do stuff with options. Oh my gosh, you're going to love it. I'm going to show it to you in just a moment. But yes, there's a big but coming. Options are super dangerous if you're not getting it. This is why I wanted to do this Options 101, because I hear that a lot of people are losing money with options because it screws with their head. And again, if you're a little bit confused right now, I'm not surprised. I mean, I was confused in the beginning. So you really have to go through it. But as you can see, these are building blocks. It's actually very logical. But you have to go through it a few times before it really sinks in. But once you got it, you got it. Anyhow, so if you thought, wow, this is pretty cool, and I have some basic idea, let me ask you, would you like to trade options together? I mean, you, my head coach, Mark Hodge, and I, would you like to do this? Because what I want to do is I want to show you one of these 4 strategies in detail. And right now, I mean, again, the VIX is high right now. So what should you be doing? Should you be buying options or should you be selling options? You should sell options, right? Because the VIX is high, option premiums are high. So this is why right now, during the crash of 2020 that is still going on, the VIX is still high, we have an opportunity to be an options seller and collect premium. So if you want to do this, I've put together a step-by-step playbook for being an options seller. Again, this is a strategy that you can use sometimes, and right now is a great time to use this strategy. So this is what I want to invite you, if you're up for it, to place trades together live. So I want to do a class where I give you this step-by-step playbook with exact rules of what to look for if you want to be a seller. And then in addition to this class, I thought we can meet 2 more times and trade it together. So plus I want to show you how to manage the trades live, because I want to make sure that you know what exactly you should do if the stock is going up or it's going down, right? So that you know exactly what to do. And if you're interested in this, if you would like to do this, just say yes in the comments. I'm curious, because then I want to show you how we can do this. So just click on like right now, or type in yes in the comments, and then I'm going to show you how we can do this together if you're interested in this. Okay. So you see, the perfect strategy for these markets right now, why we are still having this uncertainty with all this nasty virus going on, right? I have been trading this particular strategy on one of my smaller accounts. I have several accounts, and here on March 20th, as you can see, on March 20th, this account was just slightly above 25,000, 25,380. So, and until today, yesterday actually, last night, this account has grown to $33,000. So as you can see, trading this one strategy that I want to invite you to trade together, which is selling puts, is working really, really well right now. Because if you look at this, within, what is it, just over 2 weeks, in less than 3 weeks, I was able to grow this account by 30%. Now, very, very, very important disclaimer. My results are not typical. I'm really, really, really good at this. And the reason why I'm saying it to you, if you're new to trading options, you should not expect these results right off the get-go. The main reason why I'm sharing these results with you is not to entice you and say, oh my gosh, you should do it. I just want to show you I am a real trader. I do trade live. I do trade my accounts. And if you have been watching my YouTube channel here, you know this, because I'm showing my accounts live, and we're placing trades live. So, but keep this in mind, my results are not typical, and this is in no way, shape, or form a representation that when we trade together that you will achieve similar results. But all I'm saying is when we do it together, your chance of succeeding, I believe, is higher than when you're trying it to do on your own. Is this making sense? Okay, good. So when we trade together, there's a few things for you, some requirements so that this makes sense to you. So you need to have at least $10,000 in your account for this particular strategy. As I said earlier, options are great for trading small accounts, but for this strategy that I want to trade live with you together, which is selling puts, you need to have at least $10,000 in your account. Otherwise, you won't be able to follow along. So if you don't have this money right now in your account, don't worry about it. There will be a time when the VIX is lower, and when the VIX is lower, then you can buy options, and you can do this with a smaller account. Now, secondly, you need a so-called margin account, not a retirement account. You need to talk to your broker and say, do I have a margin account? Or you might want to open a margin account. This is very important because, again, if you don't have this, you won't be able to follow along with the trades that I'm placing, right? And then it will be frustrating for you. And I don't want you to be frustrated. I want you to be happy when you're trading along with me. Number 3, you have to be cleared by your broker to sell options. It is not that difficult, but you gotta talk to your broker, whoever your broker is. TD Ameritrade, Schwab, Fidelity, Interactive Brokers. you got to call them or send an email and say, am I allowed to sell options in my account? So that's why I'm putting all these things together for you right here. You get the idea, so that you have a checklist of what you need to ask your broker. So send him an email or call your broker and say, do I have a margin account, or what do I need to do in order to get a margin account? Am I clear to sell options? Yes or no? And you must understand these basics that we just talked about, because when we place trades live, right? I mean, we will operate on the platform. I won't have time to go through the basics again. So make sure that you watch this particular presentation here a few more times, that you have the basics down. Now, again, I don't expect you to be an expert. We will go through a step-by-step class, a step-by-step playbook that I have for you of how to sell puts. But again, right now is a great time to do this. When will be the next time? You have seen it. Usually, a time like this only happens a few times a year. So right now is a great time to take opportunity, to take advantage of this. So if all this intrigues you, and if I haven't scared away you yet, and if you say, yeah, you know what, I can find $10,000, I can probably wire it out of my retirement account into a margin account. Yes, I can call my broker or send him an email. I can clarify these things. And yes, I can watch this. So if this intrigues you, let's have a little bit of fun. You know that right now there's this series of Netflix. It's called Tiger King. I haven't watched it yet. Is it a series or is it a movie? Don't even know. I just the other night when I flipped on Netflix, there was this huge advertisement for Tiger King, and apparently it's super popular. There's a ton of memes running around on the internet, so my team couldn't resist, and my team made a meme as well. Here it is. So my team actually had some fun, as you can see, photoshopping my face into this, calling it Marcus Exotic. Anyhow, here's why I'm telling you this. So instead of being the Tiger King, trust me, I'm not the Tiger King at all, by no stretch of the imagination. But Mark and I, we are the Theta Kings. So anyhow, that's why we thought, right now, this Theta thing does not make sense to you just yet, but it will. So that's what we want to do. We want to trade together with you. So we have put together this class that we do live. On April 13th, we will have the class where we give you the playbook. And then on April 14th and 15th, we will be trading live together. Now, usually the price of this class is $997. However, as we know, right now we have this nasty virus going on. Right now, we are all staying at home, staying safe, right? So, and you know that this is a time where we need to stick together. So this is why I talked to my team and I said, let's do something special. So if you're still watching it here, I have something super special for you. I have a promo code for you that is called Stay at Home. When you apply this promo code, the price of this class, your investment, instead of $997, is only $147. $147 for 3 sessions. On Monday evening, we will go through the playbook. So it will probably be 60 to 90 minutes, so a little bit longer than this presentation, because I want to show you the exact step-by-step approach, how you find the best put options to sell. Again, this is for this one strategy that works really well in the market right now. And then this is Monday night. On Tuesday morning at 10 a.m., and you say, right now, pretty much everybody is staying at home. So I hope that you have some time to watch me place the trades live and to do it together. So we will use a different platform. It will not be on YouTube. We're using the GoToWebinar platform. As you know, Zoom has some problems, so we are using GoToWebinar because we don't want anybody to Zoom bomb us. Anyhow, so we'll use GoToWebinar on Tuesday morning and Wednesday morning. So basically, next week on Monday, Tuesday, and Wednesday, we're having this class. Now, the whole class will be recorded. The recordings are yours forever. And if this intrigues you and makes sense, and you're intrigued by the idea of selling puts in this environment, learning this strategy and getting the step-by-step playbook, then go to rockwelltrading.com/theta. This is where you can sign up for the class. So here's the challenge. You see right now, I'm not even quite sure. Right now, yes, we have 561 people watching this live. Most probably, there will be another 2,000 people watching this presentation here over the next few days. But in this class, we only have 100 spots. And here's why. Very simple. I want to make sure that I can answer all of your questions. As you can see, if you're watching this live right now, you probably see all the questions flying in on this side of the video, right? And right now, I cannot address any of the questions. So I will do it in a minute, but in a class that is smaller, where we only have 100 people, my head coach, Mark Hodge, and I and the team will be able to address your specific questions, because that's important for me. I want to be your safety net. Yeah, I want to make sure that when you start trading options, that you're doing it the right way. This is why I like to keep it easy. This is why I'm not promising you a class where we talk about, 10 different strategies. We'll focus on one. And once you master this strategy, then we can move on to another strategy. So yes, I first will teach you how to sell puts in this environment, because it has been working fantastic for me. You have seen my results. Again, my results are not typical at all. Don't rely on these results to sign up for the class. I mean, just keep in mind, there's always the possibility of losing money with trading, but ask yourself this: if this works out, can I make back my investment of $147? And I believe so. I mean, this is right now special, and this is why we call this promo code here, Stay at Home. I want to make sure that while we are all staying at home, you are picking up a valuable skill. All right. Hope this helps. And since I'm doing this class live and we have more than 500 people on here right now, I want to take the time to answer some of your questions. So if you watch the class here right now and you're watching the recording, leave a comment right underneath. And either myself or my team will do the best we can to answer your questions if you leave them in the comments right now. So, let's see. There are quite a few questions. I need to find my way here. Oh, okay. So, just to make sure, hold on. If you are a Rockwell Trading Mastermind member, if you're part of my mastermind, you already know the drill. Do not sign up for this. You're getting it for free. My mastermind members, and you know who I'm talking about. Mastermind members are getting this for free, as always, right? This is why you're part of the mastermind family. If you're platinum or diamond, this is where it is included. Don't worry, we will sign you up automatically. Make sure that you don't pay for this. Lisa will reach out to you, or you can reach out to Lisa. You know it when you're a mastermind member, so don't worry about it. Mastermind members, of course, get this class for free. And if you're not a mastermind member yet, $147, what do you have to lose? So there is a lot of questions. And so Shadow Stalker is asking, would it be a good idea, I'm just trying to find the questions here, to sell an Apple put at an extremely high price that it's not to reach? No. You want to sell a call at a high price or a put at a very low price, right? So this is why, again, if you're a little bit confused, watch it again. So important. You need to make sure, because if you're getting confused and you're doing the wrong thing, you can lose a lot of money here. Okay, so when the VIX is high, options are expensive and you should be a seller. When the VIX is low, you should be a buyer. Absolutely. Good. So does the option activity still fall under the day trading pattern rule? I believe if you're opening and closing options in the same day, but we're not doing this. We're not doing this at all. So we usually open it on one day and then we hold it for a few days. So therefore you do not fall under the day trading pattern rule here. Okay. So please write a book on options for us, Marcus. I might. I might, okay? I might actually take this presentation and turn it into a book, so this way you have an options one-on-one, if this is helpful here. Okay. Good. Diane is asking, can you discuss the liability if you get assigned, especially in your model portfolio that has multiple contracts? Yes, we will talk about this. We will talk exactly in the playbook that I'm going to show you. Based on your account size, I'm actually right now developing an Excel spreadsheet that I'll give you for free as part of this class. So in this Excel spreadsheet, you just plug in what is your account size, and then it will tell you whether you should be selling a certain option or not. For example, Tesla is a very expensive stock. If you have a small account, you should not be doing it. But this will be part of the playbook that is part of this class here. So Diane, just really invest the 147. It's a super low investment. It's a no-brainer. Trust me, this price will go up to $9.97, and we will close the class once we reach 100 people, because I want to be able to answer these questions. You see, this is when you're part of the class, and when we are trading live, you can tell me actually, okay, how big is your account? And I can tell you whether you can take this trade or not. My promise to you is that next week when we are trading live, I will specifically look for trades that you can do on smaller accounts, okay? So I will make sure, that's why I say you need to have a $10,000 account. It needs to be a margin account, but I will look specifically for trades that are for smaller accounts. But great question here. Okay, Miguel is asking, can I sign up for the class even if I don't have the $10,000? Yes. So Miguel is saying, I have around $7,000 in your account. You see, you might not be able to take all the trades, but the good thing is you are acquiring a skill here. You're getting some knowledge that you can use the next time the VIX is going up. And trust me, the VIX will go up again. It always happens. It stays low for some time, and then it jumps up again. You have seen it, right? I mean, it jumped up at the end of 2018. It jumped up in the beginning of 2019. Right now it's up. These times happen over and over. And again, with $7,000, if you have a margin account and you're clear to sell puts, you will be able to take some of these trades. You should be able to. So great question. Jaga is asking, are these weekly options? We will use both. We will use weekly options and we will use monthly options. So, and again, all of this will be part of the playbook so that you know exactly what options you should be trading here. Amanda is asking, how do I get into the mastermind class? If you are interested in the mastermind class, I'm just seeing right now that my head is getting cut off here a little bit. Let me scoot down here a little bit. There we go. Okay, if you want to get in the mastermind class, contact the team. They can help you with this. Let me just see. I should have right here. Hold on. Call or text the office at, that's the US number, 512-337-1885 if you have any questions, if you would like to learn more about the mastermind program, because that's where I trade once a month live with my students. This is where we are in touch 3 times per week, actually 4 times per week, right? So it's a great program. If you're interested in this, call or text the office, say, hey, I'm interested in the mastermind. Can you give me some more information? And somebody will then get back to you. Okay. Why do you go out 30 to 45 days? Why not less than 5 to 10? No, actually, there's a misunderstanding. So you see, the example that I used right now is where we had 9 days to expiration. I like to use anywhere between, let's say, 9 or let's say 7 and 20 days. 7 and 20 days for selling, right? For buying, it's a completely different animal. So for buying, it's a different animal. Okay. So, but great question here. Okay. Noel is asking, let me just bring it up here. A few questions. Do we need the PowerX Optimizer to trade options? No. For this particular class, on how to sell puts, you do not need to have the PowerX Optimizer. The PowerX Optimizer is for buying calls and options. And as you have seen, that's what we can do most of the time. But for this class, you do not need the PowerX Optimizer. Okay, so Luna says, how will we access the recorded sessions if you purchase the course? You get access to our members area. So you have a username and password, and in the members area, there's all the recordings. The class recording will be there as well as the live recording. So if for whatever reason you miss it, you have this. Plus, let me just show you, we do have a really cool app. So we have an app on the phone, and you actually will get a notification that it is available in your app. So you can download the app, you put in your username and password, and then you can watch the recordings live there as well. Okay. So Guillermo is asking, will you be sending the link to Rockwell members if you are a diamond or a platinum mastermind? Yes, you will get the invitation. The team takes care of this automatically. You don't have to do anything, but of course you can always contact Lisa. We'll probably be sending out the link this weekend, right? So if you are a platinum or diamond mastermind member, don't worry about it. You get access for it for free. All right. Okay, Nick, I've signed up for the put option training. That's so awesome. I'm so excited to work with you, right? I mean, so we will talk next week, and I will show you exactly how to do this. Okay. Hi, Marcus. Where can we monitor the VIX index? You can always do it on TradingView. So this will be part of the playbook in the class. So, I mean, right now you can go on TradingView, or you can go on finance.yahoo.com and you can monitor the VIX there. But again, I want to make sure that as part of the class or part of your playbook, you know exactly what to monitor, when, and where. Okay, Fernando is saying, I want to take the class, but I won't have the 10K right now. Is it possible to take the class? Yes, you can. The challenge is you might not be able to place the trades. And this is why I want to be upfront. I want to be upfront about the requirements for this class, right? When you buy options, you can use a small account. So when you buy options, you can have a small account of $2,000, $3,000, $5,000. That's possible. For this particular strategy, selling options, you should have a larger account. But if you don't have it yet, take the class. This way you're prepared when the next time the VIX shoots up, which will happen. It's always happening. And who knows, the VIX right now might stay high for the next few weeks. I mean, some experts say it will stay high through May, actually. So we have plenty of opportunity here to use this strategy. Okay, good. Claire says, just sign up. Awesome. So excited about this. My twin flame is asking, how do you protect yourself against risk and big losses? That's exactly what I'm going to show you in this playbook, right? So you will know exactly how much your risk is, and then you can make a decision before you place the trade if you're willing to take this risk. And some trades you might say, pass, and others say, ooh, I like that, right? So I'll show you exactly how to calculate the risk and reward and how to protect yourself here. Okay. Good. Esther says, I am in as well. That is so awesome. Zach says, excited. Perfect. Zach signed up for it. Okay, so good. Fantastic. Okay. Now, I know that there's still a lot of questions, but I mean, we have been on here now for an hour, and I want to be respectful of your time. If there's any more questions, please feel free to either leave a comment or call or text the office, 512-337-1885. If you're ready to do this live, let's do this. It will be fun. It will be a blast. If you enjoyed today's class, I mean, you're going to be blown away when Mark and I are taking you through this Theta class. We are the Theta Kings. And we'll explain this, what it means in the class. So rockwelltrading.com/Theta. Usually the class is $997, but right now there's a special promo code. The promo code is stay at home. And so you can join this class for only $147. And this will be available until we start the class. Once we start the class, we'll close it. Or when we have 100 people, because as I said, I want to limit it to 100 people. I want to make sure that we don't have too many people on there, because I want to be able to answer your questions if you have any questions while we are trading live. Does this make sense? All right. Now, I hope that you enjoyed this class as much as I enjoyed doing it for you. If you know anybody who could benefit from this information, feel free to share this presentation. Share it on your Facebook page. Share this video, I don't know, by email. Share it with somebody where you say, you know what, let's do this together, because right now we are all staying at home. So why not do something, acquire a skill that you can use to hopefully make money, right? I mean, this is the idea. So share this video. Feel free to send it around to friends, to family, to strangers, to your Facebook feed, to your Twitter feed, whatever you have. And I look forward to seeing you in the class. And until then, take care. Bye-bye.